We are back, everybody, with Loan Lab Podcast, Episode 2, Season 2. I'm your host, Jimmy White. I'm with I've given you a new nickname, Mr. Weber.
Man?
You're the Iceman of the Loan Lab Podcast.
Baby
the
Caleb.
Beautiful Mr. Weber. James, how we doing today, baby?
The debut was phenomenal. Maybe one of the best episodes we ever put out there for this magnificent crowd of our people. I mean, we just crushed that. Michael Glenn was a stud. I mean, it was awesome, man.
I would be remiss not to introduce, once again, best guest of all time, Mr. Joe Gabrione.
I'd say the return of the king, but there's only one king.
That's true. We only have one
Guess
Arabian
who's
king.
back?
Yeah.
Back again. What's up, Joe? Welcome back to the Loan Lab Podcast, baby. How are you?
Everybody doing great.
How was the new year?
New Year was good. Took a nice little vacation with the family in sunny Florida. Got out of this freezing cold, miserable tundra of Illinois that has been the last couple weeks. It's been great. How about you guys?
Good. It feels,
good.
I made a Facebook post today. It's like 29 out today, and it felt like it was like
Feels like it's
59.
50 degrees.
It was
Exactly.
crazy. It was crazy.
Go
We were so
golfing.
used to that ice cold weather out there. We got a great episode here for everybody. We're going to do normal segments per usual. Mortgage rates in a minute. That takes 5 minutes. We have the rate whisperer, Joe G, on to help with the Iceman, Mr. Weber, kind of go over what's happening with mortgage rates right now. We do have lab-tested questions. We're going to do a bit of a reaction to a video clip of President Trump talking about housing prices, and then we're going to get into our interview with best guest of all time and talk about the mortgage industry from a loan officer perspective and how loan officers right now are getting just attacked by recruiters, and companies are going about recruiting loan officers in different ways. And Joe's going to give us a lot of insight on all of that stuff. So we appreciate everybody being here with us. Please hit that like button. Please hit that subscribe button. Please comment below if you're watching this on YouTube. Please giving us all the support. We really, really appreciate it. And
Ring
thank
that
you guys.
bell.
Ring
Ring
that
it.
bell.
Ring it.
Ring that bell. Gentlemen, let's do mortgage rates in a minute. That takes 5 minutes. What's been going on since our last episode, boys? That was a couple weeks ago. Not much movement.
I feel like this is probably since the first couple episodes, the first time that we've recorded within a couple weeks of the last episode. So we've been consistent. And I mean, the reality is it's kind of a big goose egg right now. I mean, we touched on all the ways that the government was getting involved on the last time, but maybe we could just spitball back and forth here, Joe, and see what you think you've been seeing here in the beginning of January and now February.
Yeah, I think they're nothing really. Like you said, the Fed meeting last week was uneventful. They didn't change.
It was a dud.
Right. Yep. They kept everything the same.
Even the commentary,
Right.
basically.
Didn't. If you look at the red line versus the prior minutes, it was not a whole lot changed. At the end of the day, they've walked it up a little bit. Rates have kind of gone up slightly, right, over the last 3 weeks, but really just range bound. And I think that Trump announced his new Fed chair. Right, there's a lot of wait and see happening right now, and I think until we figure out which way we're breaking out of the range, we're going to stay right where we're at.
There's a little bit of not like animosity like there was for Powell, but some fear in mortgage professionals with the new Fed chair, and that he's a bit of a hawk. Can you tell people what a hawk is?
A hawk, someone who's hawkish, is somebody that is likes to keep rates elevated. They're not as quick to move or lower rates or be pressured into doing so, which is kind of surprising on the nomination if you think about it, because his message has been we need to lower rates,
Exactly. That's why I was scratching my head about it a little bit. But I think ultimately we're going to see some lower mortgage rates. It just might not be as quick as people thought.
Yeah. No, I agree. I think heading into Q2, Q3 of this year, we'll see rates come down. We'll see the Fed cut rates 2 or 3 more times.
Yeah.
I think that's what their dot plot was saying for 2026 anyway. So, it's kind of a wait and see game. The good news is the affordability is back in terms of, we're not selling 7% mortgages anymore. The volatility's down. It makes it a little bit easier for borrowers to go out, make an offer, and not be, call us a week later and be like, hey, my contract got accepted. Wait, rates went up 0.5 point. Like we have stability in the market right now, which is good.
So bullish or bearish on lower rates?
Overall,
Yep.
I'm bullish. I think my opinion is the same, and Joe basically voiced a very similar opinion that maybe by end of Q2, Q3, we could see us dancing in the high fives or even closer to 6. Like right on that 6% range is where people really start to get pretty ready to roll.
Yeah, we're not far from there.
We're not far. We touched
speak
it
today.
already.
We touched it.
Right.
Yeah, I was just going to say, remember we talked about it on the last episode that for a hot second, we had the 5s, 5.99,
And
5.875.
I'm sure you are too. I'm still getting calls. Rates are at 5.99. It's like, well, not only did you miss that boat in general, but that may have been a thing for 10 minutes.
Sure.
Like the market was not ready for that.
And what you're seeing too is over the last, I think we talked about this 2 years ago, the spread between the average 30-year fixed rate and the 10-year yield was so wide that it's actually tightened. So now you're seeing, the 10-year hover around 4.25, and we're still offering 6.25, 6.5, depending on the credit profile rates. 2 years ago, that would have been a 3-point spread. It was. We'd be offering 7.25, right? So that spread between the yield and the actual interest rate, the average 30-year rate has tightened, which it's getting back to close to normal levels.
But you know what that does when things get tighter like that? Now your FICO is more important. Now your LTV is more important. Everything that you have been working on as a first-time home buyer, your credit scores and such, make sure you're in tip-top shape if you want that best rate,
Yep.
You've got people calling like, hey, my credit score is 720. It says it's good online. I'm like, can I get that 599? It's like, well, yeah, but you're going to pay more than the next guy with the 800 credit score. Yeah. That's just the reality of the biz.
Joe just said something, LLPA. Let's give the listeners a quick reminder of what that is. You can define it for us, Joe, and then kind of just explain what that means to the average consumer out there or anybody listening.
So LLPA, loan level price adjustment. So FHFA produces a grid based on the loan to value on your property, which is how much you put down versus how much you're buying the house for, versus credit buckets, right? Different credit buckets. So higher LTV, lower credit, right, is going to be the bottom tranche. And as your credit goes up, like Jimmy said, 780 or even now 800, you actually get to a level where you're getting dinged less. I think that's the easiest way to explain it. You're not having as many loan level pricing adjustments hit your price.
And you want to get hit more by a second home. You want to get hit even more by a condominium.
Correct.
Right?
Exactly.
Like there's different ways that these interest rates can be impacted that people don't see when they're looking at their, Googling mortgage rates and doing that type of research. There's a lot more intricacy.
To dumb it down even more, it's just some of the things that consumers can control that aren't attached to the market, right? Mm-hmm. Just the controllables to a specific financial scenario.
Totally.
Definitely great having both of you do the mortgage rates in a minute segment. I'll put a bow on it is, James, you and I have talked about we don't want any fireworks. We don't want any big changes. And we say this every single episode we have over the past month and a half is we haven't seen those. And that's ultimately good for everybody involved with mortgage rates.
Similar to what Joe was saying, we've been trading in this range. It's a lot of, we hear about that mortgage jargon a lot, but that range is the exact same thing that we've been talking about for a year and a half, 2 years, where we just want some stagnation here in this market. And we've finally gotten to the point where, like Joe said, somebody comes to you 1 week and the next week they're not getting hit with this massive payment shock. They're not all of a sudden wigged out, for a lack of a better term, because their payment is now $200 higher than it was the week before, and they're still able to comfortably and confidently shop for that next home.
It's good stuff. We're feeling good about the market as we have been over the past few months. So it's still going great. We talk about the market being reactionary, right? Reactionary to people talking, politicians talking, the Fed chair talking. I want to do a little bit of a spinoff and react to something that President Trump said about the housing market over the past week. Then we can kind of have a conversation about it. And we did have a lab-tested question that was tied to these remarks made by the president. So let's check out this video and listen to President Trump speaking about the housing market.
Existing housing, people that own their homes, we're going to keep them wealthy. We're going to keep those prices up. We're not going to destroy the value of their homes so that somebody that didn't work very hard can buy a home. We're going to make it easier to buy. We're going to get interest rates down. But I want to protect the people that for the first time in their lives feel good about themselves. They feel like that they're wealthy people. And I want them to understand it. There's so much talk about, we're going to drive housing prices down. I don't want to drive housing prices down. I want to drive housing prices up for people that own their homes. And they can be assured that's what's going to happen.
All right, so that was President Trump last week. What's the date today? It's February 3rd. That was President Trump last week talking about home prices up or down, driving them up or down. I actually messaged you guys and Johnny Stacks about how do we approach this, kind of talking about it. So let's just take this conversation wherever the hell you guys want it to be. I know there was a lab-tested question attached to this, which we'll ask after, but kind of give me your guys' reaction to that.
I think the blanket to everything, and we'll go much deeper, is that if home prices go down, it'd be pretty bad for the mortgage industry. That makes it a lot tougher for us to write mortgages in the way that we're writing them right now in a market where we're seeing home prices go up. Now, sure, do we see some short appraisals from time to time right now? Yeah, but if there's this general consensus that home prices are going down, things will be a lot tougher around here.
Yeah, I totally agree. I kind of laugh a little bit about him saying that he's going to help drive prices up. Like I just don't buy that. I don't think that's possible. Supply and demand are what's going to just determine the value and long-term housing market. If there's way less buyers than there are sellers, the home prices are going to come down, right? Whether he likes it or not. But the good news is that like new home builds, they're not building homes fast enough for the amount of demand right now. So I don't see housing prices coming down. Whether he wants to take credit for it or not, that's up to him. But one thing that they can do to drive the value higher would be if it was an administration that continued to cut rates and lower the affordability. You have probably a certain amount of millions of people on the sidelines that would love to buy their next house, their move-up home, but they're sitting on their 3.5 or their 3, and they're just not willing to pay 6%. But if you get it to 5.5, 5, dare I say, low 5s, right? And the administration does drive it down. I actually think that it's just going to drive home prices even higher because now you're going to have more people competing for the same amount of homes. Unless magically a bunch of builders show up out of nowhere and start building millions of homes, there's a shortage of supply. So.
Well, I think historically the problem with builders is that they are often reactionary and then they're too late to pull the plug, which is why we see a lot of these different issues, dating back to the housing crisis of 2008, right? Like that, a lot of that was because not only of bad loans, but because people kept building homes and there was the writing on the wall that it wasn't a good idea anymore, yet they kept doing it.
Totally.
So I think that's why people are hesitant right now. Most builders are still sheltered in a way, shape, or form because they're like, I don't want to get my feet into that again.
They all got burned in the past. So now instead of having 20 outstanding builds going, they got 5,
a couple,
or 6, right? And then they're just smarter about their leverage,
right? How much they're willing to.
Yep, exactly.
I like what you said about just dumbing it down to simple supply and demand, though. Yeah, because that's how the market still works.
Yep.
And to your point, if the administration is to get mortgage rates lower, home prices can't drop.
No.
No. I don't know how much
they'll actually rise. Back to 30 offers on every hot property, right?
Yeah. And again, to your point, I don't know if Trump is going to all of a sudden take all the credit for that, which he very well may.
Yeah, exactly.
But again, if rates go down, home prices should go up.
Yep.
I think especially this administration with the just political atmosphere, everybody who's listening knows it's just very high
tension.
High tension, right? I think, but when you try to take that out of the equation, which it's very hard to when it comes to politics, there's probably a group of people out there, group meaning first-time home buyers, who are like, drive the fucking home prices up. Like, what do you mean? Like, how am I supposed to drive, how am I supposed to buy my first home if prices are going to continue to go up? That is actually the lab-tested question that I got.
Did you hear that little nugget, though, that he was saying? If you listen closely to what Trump said, he said, we're going to drive home prices up. We're going to drive rates down, and we're going to make it more affordable for first-time home buyers to access new home ownership. So that's the part that I think is interesting. Does that mean there's going to be new government-type programs, down payment assistance programs? Mm-hmm. Are they going to give more access to capital and down payment assistance? Is that what's going to help it? First-time home buyers take the leap? That's what's interesting. We don't know what they might come up with in terms of government programs, and even Fannie and Freddie, right, if they're going to come out with any new programs. So
the lab-tested question was from my boy Will Stanisek from Rockford, and he asked about this clip and this comment, and he said, what do you think this does for those buyers out there, or for those first-time home buyers? And on the surface, when you try to just take the clip and take the headline of drive home prices up, probably not a great look for first-time home buyers, right? If you don't listen to those little nuggets that you're talking about, you can't drive home prices up without leveling the playing field for those who have not bought a home yet.
Well, listen, we always have a problem in this industry. There's always something to solve for. When interest rates were going up substantially, quicker than we've seen basically ever, the temporary buy down came back, right? Like they're like Joe said, maybe there's some sort of new government subsidy that comes along that helps those first-time home buyers. There will be a fix for that. There will be a way to get these people into homes, because housing is everything in America. We can't let home prices go up and mortgage rates go down and then that deflate the market. That just won't happen.
Yeah. I mean, housing, basically, like you said, is the driver of the economy and GDP. Ultimately, it affects consumer confidence. It affects consumer spending. It affects everything, right? So
inflation.
A government that wants to help the people is going to try to find a way to make housing more affordable for first-time homebuyers. So that's always, I think that's in any political affiliation, that's every agenda typically is how do we make a housing more affordable, because that's going to drive the economy.
I made a clip about this. I sent it to you guys because I was like, hey, what should I talk to about this? And you guys gave me some good points of that. I think this statement is more of an economic statement and sentiment across the country. If current homeowners are feeling more wealthy and they're seeing their equity rise in their home and their home price up, then that gives them the inclination to spend more, to invest more, to borrow more.
Yep.
I also said in the clip, though, there's a flip side to it of where those first-time home buyers are feeling maybe locked out and home prices keep going up. And I think the job of the administration, if they're going to somehow, some way drive up home prices, is figure out how can you still make it affordable for those first-time home buyers. Totally. But you brought up some great points, Joe, about we've seen different products come about in the mortgage lending industry, grant programs that come about, the temporary buy downs that you spoke about, James, as well too. I think, again, politics aside, whatever side of the aisle that you're on, is economically you can't just say I'm going to drive home prices up without making it affordable for everybody, because what did you say? Housing is the biggest driver of the economy.
Yep.
So
Exactly.
I wouldn't take that I'm going to drive home prices up to heart, to the sense of it's just going to lock everybody out.
Well, and again, I don't think he can. Right? I mean, sure, they can lower rates, which might have then that effect, right? But like, there's no wand that they can wave, and all of a sudden home prices go up, right? Like, it still comes back to the very simple supply and demand. And if there's more buyers than there are sellers, home prices are going to continue to rise because more people are fighting over the same amount of homes. And until that changes, I don't see home prices really coming down.
And
that can be a good thing. Like he said, like that, there's tons of people that own homes, right? So the more equity you have, like you said, Jay, you're going to take out a home equity line of credit and redo the house. You're going to spend more money. You're going to leverage more. That's just human nature. Yeah. That's never really going to change.
No one has the crystal ball. And this is, again, we're not trying to get too political or anything on this podcast, but the last administration had this idea of basically wiping LLPAs. We talked about LLPAs a couple minutes ago for people that made under a certain threshold of monthly or yearly income. And that didn't work like they thought they would, because rates were still too high and home prices were too high. Was it a good idea? I mean, I guess so, but it didn't work.
Yeah. Well, the income threshold was pretty tight too.
It was way too tight.
So even if you're a first-time home buyer, if you make, $1,000 more than the 100% area median income limit, you now don't qualify for that first-time home buyer LLPA waiver.
Well,
so,
guess what?
Like
It
said,
dissuaded that person then too, right?
Exactly.
That person that made a little bit too much money then went back to the sideline. Oh, I'll wait.
Exactly.
Right? Maybe this limit will go up, or maybe there's some other thing coming next year. So again, I guess my point is that no one has that crystal ball. No one's going to get this right the first time. But as mortgage professionals sitting in our seats, we're pretty good at trying to solve those problems.
Exactly.
Because that's the only thing that we can do.
Yeah, we solve those. Exactly.
We can't control it, but we can
we
solve
don't
it.
control it. I was just going to say these statements that are being made, that's way above our pay
Remember
grade.
portable mortgages?
Yeah.
Like all that's like that's what happens, guys. Headlines come up, and then we deal with the backlash, and we educate people.
We will see how this all unfolds throughout the rest of the year. Again, just a headline that I think we needed to react to here on the Loan Lab podcast. So
I like it.
I think it's a good one. Let's get into best guest of all time interview.
Yeah.
Oh,
We always love
still calling me
having
a guest. I don't know what that's all about.
best guest on. We wanted to talk about quality over quantity in this episode. That's the name of this episode. And around this time of the year in the mortgage industry, there is massive LO turnover. And what that means to everybody listening is people are trying to jump ship, move different companies. A lot of companies are recruiting a lot of bodies and maybe not building people from in the mortgage industry, in the mortgage landscape. I guess first and foremost, and we all can kind of talk about this, is why do you think there's so much turnover around this time of the year? What's your guys' take on why people are looking to maybe move companies, not even in the mortgage industry? I see a lot of realtors out there looking to move to different companies, and then maybe potentially in other industries as well too. What do you think the end of the year, holiday season into January, do you think it's just, hey, it's a new year, new me, fiscal year? Like, what's your thoughts behind the massive turnover December and January?
I'll let Joe take this, but in short, it's the cyclical nature. It's just the seasons. It's a new year, and
everybody
things slow down.
gets in that mindset of, if I started a new company, it's going to be a new beginning, right? New year resolution, so to speak, right? Everybody's going to lose a bunch of weight, and then they don't, and then they, that cycle starts. It's just life, right? Everybody has their different mindset. I think that what I'm seeing a lot out there is people leave people, they don't leave companies, right? Everyone thinks like, oh, you're leaving cross country, or you're leaving, whatever mortgage, doesn't matter. I'm not trying to pick on anybody. They're leaving their lack of management or their lack of oversight or their lack of support is really what they're leaving. And I think that's what people crave right now is everybody's trying to find ways. There's less loan officers in the market, which is good. The less market share, but less loan officers. So the same amount of, less loan officers can go get more business still. They can actually still grow, even though the amount of originations has shrunk. And I think that there's just a huge lack of leadership, huge lack of support. There's just not enough coaching and accountability partners and things like that truly are going to help the, younger, new up and coming loan officer who's doing anywhere between 5 and 10 million a year in origination that wants to be a $20 million producer. Like they're at a company that doesn't have the culture or the support to be able to get them there. And that's why they're leaving. That's what I'm seeing mostly. And people who we're talking to constantly, it's not because their pricing sucks or they're, they don't have, everyone's got the same marketing tech stack, everyone's got the shiny bell. It's like, who's going to help me take it to the next level? I think is what the industry lacks.
What's broken in like that traditional recruiting model right now? Do you think like what's a lot of people, we see them, the automated text, right? Or maybe offering some
that itself is broken.
Like what do you think is, I mean, aside from that, what do you think is broken in this traditional recruiting model that you've been seeing and that we're trying to change here at LeaderOne and the Gabrione division?
Well, I think the main thing is people are recruiting loan officers all about like comp, right? I can pay you more basis points, and that's great, but now I got to sell a way higher rate, so now how much business am I going to sacrifice to make a little bit more on one deal, right? What if I lose 25% of my book because I'm getting 150 or 200 basis points in commission instead of 120, right? You got to look at the entire picture, and I think that part is broken. There's too many people going after quantity instead of quality, so they're just, offering ridiculously overpriced comp plans. And the loan officers aren't spending enough time digging in. And what does that mean, though, to your everyday business and what rates you have to sell? And it's not going to guarantee you more money in your pocket, right? You actually might lose business. So I just think that the industry from a recruiting standpoint has just been saturated with garbage, a whole bunch of random non-personal text message, come work for so-and-so and we're going to pay you 200 basis points in commissions and you're going to have this marketing tech stack. And it's like, okay, great. Everybody's got that tech stack.
The comp is always the shiny object.
Yeah,
we
exactly.
started late 2014, early 2015. I was getting text messages like that by freaking May of that year. Like just, I only make 100 bips. I can make 200. But that's how people, they get people
react.
Yeah.
But the people who are reacting to that, it's like those companies are okay getting those types of people, which are like, I only want to close my 10 loans a year, so I'm going to go sell massively high rates, and I don't really care. It's my friends, family, and referral partners that are going to use me no matter what I sell. So if I'm only going to close 10, I want to max my comp out. That's not how we're trying to grow, right? Those aren't the type of people that you build a true company with or a business around.
We talk about impact over income here at our division, your division, Gabrione division, and then the impact region that we're a part of. And I think when you're hiring on and recruiting those people who are more worried about their income as opposed to the impact, it's not great for the clients that they're serving.
It's terrible.
Probably the last thing that a consumer or client would want to hear. And then you get, as a loan officer, you get so stuck to how much money am I going to make on this deal and not perfecting your craft and educating and
you're backpedaling constantly because you're being rate shopped and you have no idea what you're doing because you don't do a lot of deals.
Exactly.
And you're not trained well to take those types of objections into play. So
I think what Jimmy, you said around just like the impact team and the impact region that you guys are leading here, right, is like we're truly trying to make an impact. We're trying to change these loan officers' way of thinking and doing business, or swiping and adapting some of the stuff that you guys have done to grow your business over the years, right? You guys are perfect examples that, new, younger talent that's doing, like I said, I use that 5 to 10 million million because that's a level where a lot of people get stuck. And to take it to the next level and double your business, you need to be masterminding once a month. You need an accountability partner. You need to be coached. You need support, right? Like, or else you're going to just always do 5 to 10 million, right? Like, how are you going to get to the next level if you don't have the right support? And I think that's exactly what we're trying to do. And the type of people that we're trying to find are the ones that are craving that.
Jimmy and I really haven't spoken about that, the impact team and the region on the podcast. Breaking news. I love it. It's actually good. And I don't think we haven't spoken about it for anything, for the fact of we always are. We've set our business up to where we have a specific why behind our business. And we always use the word impact because we want to impact as many people as we possibly can. And thankfully, you gave us an opportunity to continue to do that, but not only our referral partners that we're working with, our clients that we're working with, but also people that are in the industry as well too. So
heck yeah.
We've been very grateful for that opportunity, and that's our why behind our business, is to impact as many possible people as we can. And of course that turns into income, right? The more people you're talking to,
absolutely,
the more income you're making, but that's the why behind the business. And that's how we kind of have set up this impact team and, region here under your guidance, because you're very similar.
And Johnny
the same
Stacks
way. Johnny Stacks,
part of that. I think you guys can probably do an entire segment just all about impact.
We could,
because it's awesome what you guys are creating and what you're doing and being able to share and give back. Right, most people producing at the level you guys are producing, they're closed-minded, right? They're half glass empty type of people who just are worried about them. If I teach another loan officer my secrets, like, they're going to take business
all
from
my
me.
tricks.
Like, no, they're not. Like, this business is so big. It's like, no, they're not. Right. And you're in different markets and you're not going after the same referral partners. So, what you guys are willing to do and how you guys are giving back to these guys and gals here locally and what we're trying to build is special. I'm excited for what we're about to do together.
Yeah,
we
are
guys
too.
Are gonna do.
Absolutely. And just to kind of tie that in as well too, I've seen this across the industry of like override managers, as opposed to
ivory
true
tower
leadership.
Is what I used to call those. Sitting on the ivory tower.
So it's kind of explain that, Joe. What override manager versus like true leadership, true care for the people that you're working with.
Yeah, I mean, a lot of the old school, I'm going to call it, setups, right, in the mortgage industry, where like you go work for a company, they give you an area manager, a regional manager, and a division manager, and they're all armchair. I call them armchair managers. They don't get out of their chair, they don't do anything all day, and they collect an quote unquote override on your business, right? It can be anywhere between 1 basis point and upwards of 10 basis points. So what does that mean? If I'm paying, and let's just use an example, an area manager, a regional manager, and a divisional manager 25 basis points in my price of rate that I have to sell, for every $1 million I sell, I have to pay them $2,500, right? That makes my rate worse. It makes it more expensive. And as a loan officer, you should be evaluating what you're getting from those people, right? Because if you're not getting a ton of support, a ton of coaching, a ton of training, everything we're talking about, a ton of impact, right? Which is what you guys are trying to provide, you shouldn't be paying that, right? Because it's affecting your rate. I don't think paying an override to people is bad. It's a good thing if you can be held accountable to that override and you're providing a ton of value. It's worth it. You're
It's a
help them double their
mentor
business.
relationship.
Yeah, exactly.
But oftentimes it's not. To
No.
your point, those people are just sitting there collecting checks.
Yep. Thanks for coming and working for me. To work.
And I think that's what makes us different.
Totally.
I truly do. And I will. The listeners have heard of our story with you, but it all started when we were first sitting in that closet desk or closet office across the street here at eClick Lending, and you and your brother Tony and even your brother Pete. You were more than just override managers to us.
We were
and
grinding every day.
You saw the impact it made on us, but you saw that kind of flew out to it kind of went out to our clients as well too.
Yeah.
You guys truly cared about how we were treating people.
Absolutely.
And you truly cared about our success, because our success meant that we are really serving home buyers, refinance clients, agents out there. And I think that trickle-down effect
100%.
has really helped us become better loan officers and then now become better leaders. But it all starts with the client and the home buyer that we're serving, or the partner that we're serving. I know we're talking about the mortgage industry in this, but I want to make that very clear for any of the consumers out there listening, is the leadership up from the top trickles down to you as the client and the homeowner. We're not out here trying to just collect checks. We're trying to impact, and you kind of beat that into our head as we were first starting.
I think that's how Midwest Equity was built.
Absolutely.
With your brother and Dave Hansen, it was never just a transaction.
No,
Yes.
client for life relationship.
Oh my God! I mean, that's how I built my book of business. You too, right? Like
You're still doing loans for people you did in 2015.
No
Absolutely.
doubt.
That's what's
And
great about it. It's
it's-
beautiful.
despite changing email addresses or
Yeah.
companies or whatever, people know how to reach me, and people know that I'll take care of them, and that
Yep.
that didn't come out of thin air. That
No,
trust,
no.
that was formulated by, again, the leadership that we had gotten and what was instilled in us to make sure that everyone got the best possible experience. And guess what? When things went south, we were trained at a very young age in this business to be able to deal with it.
Yeah.
and
exactly.
fix
Gotta
problems
adapt 100%.
and solve. Yeah, exactly.
Chameleon of your craft. And I think that ultimately, like what you said about even, changing companies, things happening in the industry, like again, no different than a loan officer caring more about who they work for than the company they work for. I think that it goes to exactly the same with a client. They care about the name on the back of the jersey, actually, your guys' names instead of the name on the front.
Yep.
So I think that again, it all comes back to impacting a client's life to where you're their first phone call, no matter what the transaction is, right? That says it all. That's like the best review I could ever get, is that client from 8 years ago that shoots me a text like, hey, Joe, I'm back in the market, right? I haven't talked to you in 8 years, but you're the first guy I thought of to reach out to. We're thinking about getting pre-approved. Like that's everything. Like that gives me chills to this day.
That's
Still
great.
getting those texts, right? Like, yes, okay, we did a good job. We did something right? Like,
Correct.
Yeah, we stayed in touch too, and I think that helps, right? It's continually to stay in touch with those people over time and checking in, and again, creating that client for life relationship.
That's the personal touch. I had
Yep.
a great lunch with a real estate agent out west last week, and recently moved out to the Western Burbs, like we've talked about. And he's like, I've never heard of LeaderOne, but I've heard your name. And
Exactly.
Before that would have bothered me, like, oh shit. But now it's like, I love that.
That's all you want.
Oh, you know
Yeah.
my name, but you don't really care about the other. That's
Exactly.
great. Let's do some business together.
The word legacy gets thrown around, the legacy that you want to leave for yourself. And we kind of talked about it last week with Mike
we
Glenn,
did.
right?
Yeah.
About like, I don't want to be the guy, I think you said on my tombstone, I don't want to be the
He was
guy
a
who
hard
worked the
worker.
hardest, right?
No.
But legacy, and I keep saying impact, it's an awesome thing that we're impacting and leaving a legacy for
Absolutely.
those clients. Joe, you don't even do loans anymore, and you have clients reaching out to you because you
it's
made
great.
an impact.
Exactly.
So it's
Yeah.
awesome that we're continuing to do that here. I want to shift into kind of what makes us different for those LOs out there who are maybe looking to make a move. It can be from intentional recruiting or just the coaching and the systems that we have put into place, maybe the long-term development of the LO. I know we've kind of hit on some of those, and without making it too salesy, I guess I would say. I mean,
Yeah.
what things
I think
make
that's the
us-
hardest part.
I
It's not,
know.
not making it salesy.
Yeah. But I think ultimately, you guys can probably speak to this as good or better than I can, just because you guys are the ones doing, right, the masterminds and giving back to these loan officers and really helping them dig in and do some soul searching around what are they doing every day, right? What kind of activity are they doing? You got to kind of back it. The way I'm always a reverse engineer guy, whether it's a pro forma and you're just reverse engineering the numbers, or whether it's your business. What are you doing every day, Monday through Friday, if you don't work the weekends, right? Like, it's, and I think you guys are all getting coached, which I think has helped. So it's giving you guys the tools to now give back to some of these guys and gals who, either can't afford that kind of level of coaching yet, and you guys can provide it. I think that's a huge service to our people, because you guys have learned it, and you guys know it and have all the knowledge and can give back to them. And then you guys can speak to it, right? Some of the different mastermind topics that you're doing, and some of the things that we're uncovering that loan officers should be doing that they're not.
I think the tools aren't able to be given or used without trust. And that's something that you and Tony gave us. And now we're able to instill that in other people. Without that, there's nothing.
Yeah.
Because this business is very intricate. There's a lot behind the scenes. There's a lot that people don't know. We talk about rates and margins and all that stuff. We look at that every single day, man.
Yeah.
The clients don't. So it's our job to ensure that those clients still feel comfortable.
Yeah.
It's our job to make sure that our people doing loans still feel comfortable. And there's a lot that goes into that. And it all boils down to trust.
I think one of the big points that I would make on just what we're trying to do different here is focusing on the person as opposed to the business, because, and I wouldn't say as opposed, I say it in tandem with the business, right? Opposed is the bad word. I think in tandem. As Joe mentioned, we get coached, Jimmy and I have, and we're two people who have said, hey, we need help, and we need to go obtain that help and try to perfect our craft, but also work on our lives as well too. And that's one of the biggest things that I've always told you guys that I want to give back to people is working on your physical, your mental, your emotional, your spiritual. That's, I think, something that's different that we try to kind of push onto our people because, listen, this industry, man, it's a hell of a ride sometimes.
It's ultra competitive. Most sales gigs are, right? Yeah. But it's all numbers based, and people they're so hung up on it.
Yeah.
But
I think it's
not
incorporating that personal side of the business, right, and trying to focus on maintaining a really good quality of life while still being able to crush it, right? And I think you guys have learned that over time. So have I, through coaching, right, and through learning from people that have been through this exact same thing, and are able to kind of get us in that mindset. Around that personal life, and our own mindset is just as important as how many loans we're writing every month and how much success we're having. Because if you're miserable and having success, at some point you're just going to be miserable, right? And the success is going to go away.
It doesn't matter.
Yeah, it doesn't matter.
There's no point.
What are you doing it for, right? Exactly.
Yeah, I think us touching on that foundation with your personal foundation with the people that we work with here has been huge, and it's something that we've all had to learn on ourselves, but with the help of coaching as well too. I know all three of us had some pretty tough conversations with each other about business, but also life as well.
Yeah.
And
exactly.
that foundation is so huge, and I don't think a lot of people in the sales industry really talk about that, at least not the successful ones. Not the unsuccessful ones.
Right.
All the successful people who are entrepreneurs, who are in sales, who are in marketing.
Yep.
That's a huge, huge piece of their success.
Absolutely.
It's intertwined. They want people to know their personal side as well, and that's probably why they're successful.
Exactly. Yeah, I mean, I think one of the things that we've done a really good job of is ultimately, as leaders, removing obstacles, whether that's personal or business, right? And just like, as cliche as it sounds, making an impact, right, on people's life, not just their business, but their life. And I think that builds a certain type of culture that people are craving and looking for, and I think that's something we have here. And that's something I've always said, like, we're not bringing any bad apples into our mix, right? I don't care if you do $100 million a year. If you're a bad apple and kind of don't fit that culture, and fit that, I want to give back to everybody, and I'm willing to share these ideas and how I got to be $100 million producer. Like, it doesn't work for us, right? Like, we're looking for people that care and want to be part of this special team.
But that's the important part, what you just said there, because in a past life, it might have been like, we'll bring anyone on that is just ripping it.
Numbers.
The cover off the ball right now. Let's go. More loans, more. That fixes it. Well, we've learned the hard way that doesn't work.
Doesn't work.
Yeah.
Exactly. Creates a lot of attrition that way too.
I love it, guys.
Yeah.
Any ending thoughts on our quality over quantity topic? Anything else you guys want to add on?
I think we went pretty deep there.
I do think we went pretty deep, but I will say, despite some significant life challenges recently, I'm the happiest I've been in a very long time, and that's because my, it's cliche, but like my work family, you guys care about me, and I know that I'm always taken care of.
Totally.
Because you guys know that I'll take care of myself too, and that's really important. There's so much that goes on, in a daily life of somebody, right?
Absolutely.
But man, is it tough to stay focused sometimes? Sure. But when you have the right people backing you, that's really important.
Oh, yeah.
No doubt. All right. In closing on this, Joe, this is for you.
Okay.
If you were a loan officer thinking about making a move right now,
okay,
what questions do you need to be asking before you make the jump?
Man, well, I think, again, going to a lot of what we talked about, I think one of the first things I'm going to ask my potential new manager or new company is like, what are you going to do specifically to help me grow my business, right? Like, outside of listen, everybody's got the same rates, right? It's just how much margin are you going to be selling versus other people? How much comp do you want to make, right? Like, that stuff is, everyone's got the same tech stack. Everyone's selling the same rate sheet per se, right? Obviously, companies will charge certain loan officers more than others, but if I'm a loan officer in this industry and I'm trying to make a move right now, I'm looking at somebody in the eye and saying, "What are you going to do to help me grow my business?" Truly, don't tell me you're going to give me better rates to sell. Don't tell me you're going to buy me leads. I don't want leads, right? Like, I want coaching. I want accountability. I want to be in a group of guys that they all went from 20 to 30 or $40 million producers, and I want to know that roadmap, right? Show me how to get there, because it's like there is a roadmap for it. It's touches, it's calls, it's having somebody hold you accountable. And if you're talking to other companies and other managers and they don't have a plan for that, or at least sound like they have a plan for that, I'd be running for the woods on that type of thing. I think that's the most important thing out there, because I said everything else is pretty equal when it comes to speed, good team, good processing. Like, that's just good underwriting. Like, that should just be a guarantee
standard,
at this
right?
point, right? Like,
It's a
yeah,
standard.
if you don't have good underwriting, you just suck, right? Like those people are going to leave eventually anyway, right? Or just common sense underwriters that'll pick up the phone and communicate and like, understand like this is a business. We're here to close loans and we're here to work together. Like if you don't have that stuff, that's just, a non-starter. I'm not even talking to you if you don't have that. But I've done some research, I feel good about you. It's between you and 2 other companies, right? Like I think that's where you really got to hone in on, okay, how are you going to help me go from 10 million to 20 million though? And what does that roadmap look like?
I'm glad you went there, man, because I feel like that for you as the division president or us now as regionals, like that's the question that I would liken to from an objection standpoint to what's your rate?
Yeah,
that's a really important question that someone's going to ask. You need to have a damn good answer.
Yes.
And you need to believe it too.
Yeah.
You can't just spew.
No,
and
exactly.
You need to
smell through that.
You need to have a plan. You need to have a very concise plan.
Yep.
But with legs.
Yeah, exactly. I think that's it right there. Is honestly, I don't even think there's a whole bunch more. Obviously meeting the leadership and feeling good about it. Because I think some of the, working for people sometimes feel, right? Like I'm a big like, hey, let's meet, have lunch, have a drink, dare I say a drink, just to, put a face to a name, rub elbows, shake hands, look somebody in the eye. Like, okay, do I trust this guy or gal?
Sure.
Like, do they trust us? Like, can we build that camaraderie? I think that's so important because we're talking a lot about culture and impact. And if I can't go across the street to Gibson's and have a drink with you, like I certainly don't want to work with you every day, right? Like,
sure.
And I think that would go both ways.
You realize maybe in the first couple of minutes, I don't want to be here anymore.
Exactly.
That's not a good sign.
That's not good.
No,
it's not good.
As always, our conversations don't only tie to the mortgage industry. It ties to pretty much any sort of job industry out there. It's true leadership. What does that look like? What sort of value do leaders add? And again, if you're listening to this and you're in any sort of other industry, I think you need to listen to some of these points that we were talking about because it doesn't just stick with the mortgage industry at all. And that's why I love this freaking podcast because we can come on and talk about the mortgage industry, but chop it up.
Lab.
It's the lab,
anything
baby.
in the lab, baby.
It's a lab. All right, to end the episode, I know we all have some pretty exciting things coming up personally, but then as a collective, hint, hint, collective, coming up here over the next few months. So I'll start first. And Joe, you and I are kind of doing the same thing, but we're going to, me and Joe are going to start doing a local legends or local business spotlight video series that we're super, super excited about. We're going to go into different businesses that are local to us and kind of shoot some videos and just spotlight some cool spots.
Super exciting.
So we're really excited about that. We did get a new video content person that we're really excited about that we're going to be using for not the podcast maybe to start, but just some different personal videos that we're going to be able to put out there. We're super excited about the branding, but I'm very excited to get out in the community and go do some fun stuff. Go film some content. Joe, you can speak on your part of it. I know I kind of took your shine on that.
No, I'm pumped up. I'm excited. I've been in Hinsdale now a little over 4 years. Met some really cool business owners that I'd love to feature and just kind of get a little bit behind the scenes of what's made their business so successful and help them put that out in the community. That's a passion of mine. I want to be a good local resident, give back to the people. And listen, it doesn't cost them anything, and if I can help them promote their business that I love, I'm only going places where I go and I love, and I, whether it's good food or good ice cream or, a good workout, right? Like those are the places I want to feature. So I'm excited about that. And then you mentioned the collective. So we obviously also have, don't mean to take your plug here, but we're throwing our next big live event, dropping March 19th over at Gibson's again. So that's going to be our next huge panel that we do featuring some top agents. More to come on that, but I'm excited to get that rolling as well as our second event that we've done since last year.
And it's a March Madness event.
Yes.
And if you don't know anything about us,
Joey Buckets is here, baby.
We love
Let's
our
go.
March Madness events. So that Closer Collective will be announced here maybe by the time this podcast drops. It's a great event that all of us are included in. We do some moderating. We do some eat some lunch, have some really good heavy hitter producers out there that come and just kind of talk about different agents. James, I know you kind of teased a little bit about some endeavors that you're taking on. Is that something that you still want to tease? Do you want to give the people anything more on what's going on with you?
I won't speak too much to it, but tune into Marquee this spring and summer because
Nice.
there might be some commercials in the Jimmy Weber group.
Ooh.
And maybe some Lone Lab plug as well.
Maybe
like
some
that.
Lone Lab. I can
that.
kind of envision it now. It's PCA hitting a bomb at Wrigley Field, and then the Jimmy Weber group comes on
like
during
that.
during the pitching change after PCA just got that asshole
In
pitcher.
a lab coat. Joe, we got to plug
That would be
Danucci's,
nice.
new to Hinsdale. we
Oh,
had a
yeah.
damn good meal
So
there.
good, yeah.
Danucci's in
Danucci's just
Hinsdale, guys.
opened.
Check it out.
It was really good. I think we tried every appetizer.
We just
on
went down the
We
menu.
went nuts, but everything was a hit. So
Yeah.
10 out of 10.
Really good.
Way to go, Danucci's. That was awesome.
I'll, Joe, with your business spotlight, I'll give you one more. I guess we keep saying plug, but
Yeah.
this guy, Best Guess, has one of the best palates in the fucking industry, in the fucking game. He knows where the good spots are to eat.
Yes.
I've never had a bad meal when I've went out with you, so it's gonna be a really fun.
Be good.
Fun stuff coming up for the Lone Lab Podcast boys and Mr. Gabrione, Best Guess of
Lone
all
Lab
time.
Worldwide, baby.
We always love having you on,
Hey,
man, so
before
thank
we
you.
end,
Ooh.
it's Super Bowl Sunday in a few days.
We
We need a pick.
We will make a pick. Before we do Super Bowl picks, we will have Best Guess of all time on again.
Oh, here we go.
Off-site.
Okay.
In Hawaii.
Off-site.
Oh,
We will
filming in
be
Hawaii?
we will be
Yes.
doing off-site podcasts
All right, well then I gotta do a
in
plug
Hawaii.
here.
Go ahead and plug
these
it.
two guys, both again, both top 25 sales guys, both top 10 sales guys in the company. So this year being the 10-year anniversary of the Leaders Club Summit, it is being hosted on the Big Island of Hawaii. So super pumped to get out there with all of our close friends and sales people that we work with, but then also just everybody's family, right? I think it's going to be a good time. Hawaii presents some unique opportunities for some cool group activities, black sand beaches, and I've been looking up a lot of cool stuff. So I'm excited, guys. I'm excited.
excited.
I got some
News to me.
surprises. I got some surprises.
I'm
in store.
pumped.
I like it. So yeah, we'll have another off-site Lone Lab podcast in the beautiful.
We've got
state
people
of
asking
Hawaii.
us to get on the show.
Yeah, we'll have a bunch of people on from
Let's
the
go.
company. We're going to do it again. So that's
Love it.
going to be
Let's
coming
go.
out in April. Of course, we're going to have some episodes in between there, but be on the lookout for that. Let's give our Super Bowl Sunday predictions. First and foremost, can we talk about gambling on it? Okay, well, I will. I mean, I'm a big gambler on the Super Bowl when it comes to heads or tails.
Oh,
And
I like it. The props.
I've taken tails every single year. I'm going to lay a big bet on tails
Wow.
again. That's
Tails never fails
out of
until
all
it
the
does.
bets that I make on Super Bowl Sunday. That is
That's
my
the one.
biggest unit
Wow.
bets.
That's funny.
What
Just before the game even starts.
Are you heads or tails guys?
Tails.
I'm a sales guy too. So I
Tails
like
never
it.
fails
I like
until it
yes,
does.
Until it
Yeah.
does, which is,
Do you
it's
go
okay.
on the Gato too?
On the Gatorade?
Yeah.
I have in the past, but
the Gatorade
it's
that
been
gets dumped, the color.
Yeah.
the color Gatorade. I love the prop bets on Super
Yes.
Bowl Sunday, but let's do any bets you guys want to give or just predictions just in general. Kind of, what do you guys, I feel the Super Bowl it's a bit of like a dud. It's like a dud.
I kind of want to see Drake May. It'd be cool to see him win, but I think it's going to be a close game. I think a lot of people have been watching Seattle, and all I keep hearing Seattle's defense. New England
D.
hasn't played anybody. Weak strength of schedule all year. I don't know. They keep disproving everybody, though. Right? I mean, to go into Denver and get that win, sure, it was ugly as hell. But
That
did
was
you
an
see
ugly
did you see
game, man.
did you see the weather in the second half? Like,
It's turned into a snow
couldn't
game.
really do anything. It was a snowstorm the entire time. So that's a huge road win. It's a tough place to win. Now it's a neutral site down in Miami. I don't know. I could see Seattle by 3 in the Patriots covering the 4.5. That's kind of where
Miami was the Natty Championship.
Yeah.
It's up in Santa Clara.
Oh.
yeah.
it's-
you were thinking the Natty
I
Championship.
was.
Yeah,
I'm sorry.
I
That was
didn't
down in
mean to- I
Miami.
didn't
Yeah,
mean to-
no.
yeah,
I'm glad you did.
It's
Yeah,
up
you're
in,
right. It's up in Cali.
Santa Clara.
It's the Niners Stadium.
Yeah, Levi's
yeah.
Stadium.
Yeah. Yep.
I think
Yep.
we have Seattle Seahawks 4.5 point favorites as of today.
Yes.
So let's make some predictions. Let's pick our side. You go first, James.
I think the Seahawks are going to win, but I agree. It's going to be a close game, and I do think the Pats are going to cover.
I like the points.
The big thing this whole playoffs is, can Darnold win big games?
Yeah.
Now they got that bye. They earned that bye. Then they just kind of dismantled teams. Even that NFC Championship was a really good game, but it didn't feel that close.
No, exactly. It didn't.
It came
They kind
down
of let
to
them back in it a little bit.
Yeah,
That
exactly.
one bad penalty because then they threw the touchdown pass, got within 10 points, and it felt closer. But if that one guy doesn't do that taunting penalty, they get
Totally.
a 4th down stop there. Now they're punting. They get the ball back up to 2+ scores. It's probably not nearly a close game.
And I think everybody in the nation watching those games are like, all right, when is Darnold going to mess up?
Yeah,
He just-
exactly.
He
He's
did.
not.
So what's
Yeah.
going to happen in this Super Bowl?
I think Vrabel's going to be ready though. He's going to have some schemes. They're going to be ready.
Yep.
you like Seattle winning, but
Yep.
Pats covering.
I like the cover.
I'm the same. I think it's a field goal game either way. I can see Seattle winning on a last-second field goal. Pats cover the 4.5. I think it's going to be a back and forth. I do. I think it's going to be a really good, entertaining game.
What if the Bears were in it?
I'll get to my prediction and how I'm feeling about the Super Bowl. I hope both teams lose.
Yeah,
I hate them both. I hate that the Bears aren't in it. I've been kind of down on this Super Bowl with the Bears getting knocked out.
Anticlimactic.
Yeah.
If I had to make a pick, I'll go opposite of you guys.
Okay.
I do think Seattle will cover,
Seattle. I like it.
and it's solely out of spite of. This is bad, of Drake May. Now, I like Drake May as a quarterback, but I have that spite of same draft class as Caleb. He's in the Super Bowl.
Then we're going to hear about it.
You know, like, did we
championship?
pick the wrong guy?
Sure.
Like, so I think Drake May, I think he's awesome, and I think he's a great player. I like him a lot. I'm just out of spite of just same draft class. I don't want him to win a Super Bowl before
I was
Caleb.
watching ESPN this morning at the gym, and the big headline is Drake May, the best quarterback from that class. And it's the overreaction, underreaction thing. And everyone says overreaction, and it just starts showing Caleb highlights.
Yeah.
So he proved it
he's a
this
stud.
year, man. I mean, the Iceman. The guy is just an absolute stud. He's got a rocket arm.
So we all have Seattle winning. You guys have Pats covering the points.
I like a close game.
It will be.
I think it's going to be a beatdown.
And I also think, guys, Seattle hasn't had to leave their comfort of their home. The 12th man's a beast, right? This is their first time
arguably
leaving all
the
playoffs.
best home field advantage in
all of the NFL.
Yeah.
Exactly. So
True.
I mean, that's going to be the equalizer, in my opinion. You don't have the 12th man behind you, and I'll be super comfortable all game.
You asked if I think it's going to be a beatdown. I don't, but I do think, I think the NFL scriptwriters aren't going to allow a beatdown, but I do think it could be a tie ball game towards the end of the game, and then Seattle wins by a touchdown.
Sure.
So no beatdown, but I got Seattle covering. You guys have Pats covering, Seattle winning. We will see how our picks. I don't even know what our record is.
Boys.
We got to get hot. We got to get hot.
Let's go.
All right, well, another awesome episode of Lone Lab Podcast. Again, season 2, episode 2. James, tell the people how much we love them, please.
We love you guys. Season 2, wow. Episode 1 was nuts.
It was nuts.
Episode 2 is better.
Even better.
We're just getting this momentum, man. I'll tell you what.
We are fast approaching 750 downloads of the podcast.
We got best guest back, man.
It's good to be back.
He's best guest, best host.
Our goal is to get 2,000 downloads by the end of this year. Joe, tell them why they need to subscribe, like, and comment, ring that bell. Kind of give another one last plug of the Lone Lab Podcast, and then we'll end
it's
it.
just the greatest podcast of all time, especially when I'm on here. We need to get the viewership up, damn it.
We got the best guest.
Yeah, and we need to give some stuff away. I keep saying we got to give some stuff away.
We got to figure that out.
Got to do a giveaway.
More to come.
Stop teasing the crowd, and we got to do it already. Damn it.
Let's go.
More to come. All right, we appreciate everybody. Please comment, like, subscribe. We love you guys. Thank you so much for the engagement. So much for listening.
Thanks for having me, boys.
You're welcome, brother.
You're welcome.
We'll see you guys next time.